This is just an AMZN for Friday, October 11th, 2019. Would have gotten to this one a little bit earlier the weekend, but was having some issues with rebooting Thinkorswim. So here we go now. Friday was a bullish gap and go that ended up fading, came right back up pretty close to 1747 and seems to be rolling over. Again, this is just a great place. We're retesting the lows through here. If we continue lower, great. If we bounce from here, it looks like we've made some sort of shorter term higher lows and lower highs that we could be breaking out of this. I would really look for this to contend with the 21 exponential moving average and possibly do something again like this, but we've kind of shifted a little bit. So I was drawing that comparison for this range here compared to, let's see, this range here. And so the candle that we got for Friday, it kind of goes back up to the upper range. You have this midpoint, this line in between, and you didn't have a line. We were in between here where I've got the cursor for these candles, but the move that we had here was a gap up. It was much more of a high wave candle, very indecisive, and this one is just a fading candle. But it's got a much larger body, obviously. So this comparison could still be playing out, but we would need much more bearishness to come in here. I don't know if that'll happen, but if it starts to, I'll be looking to continue to trade that bearish for rollover. For how the actual day went, it was really choppy. For a bullish gap like this, it was actually really choppy. It immediately pulled back. Let's kind of start with what happened. So we gapped up, did a bit of an S curve here, started to ran right into this really old trend line from October of last year, and sold off from that, came right back into the highs from Thursday, started to bounce, couldn't quite get up to 1747. 1747 line is right at the top of the window here. Pulled back, ran up, pulled back. It started to make this triangle here. That broke down and rolled over, made a really large hammer type candle. This turned into a double bottom, broke out, retested with the neckline, and this is where I thought, okay, this thing's going to go bullish. Now at this point, it's had so much of the day to just rest, go sideways, and now it's like, okay, it's gotten all that out of the way. It's got that bullish squeeze. It's like, yeah, let's go bullish up in here and continue higher. And instead, it's just holding this level as a crazy resistance, which is just really strange to see. So I'm going to zoom in on this day. This is a line that I threw in here probably in February and drew it back to October or something like that. So maybe I haven't had it on here since October last year. But to see a line like this, it's at this point, it feels like a really random line. But look how well this worked. And, it's right at the 1743 price, which isn't anything else on the chart. Not that this chart that I've seen, and maybe you've got a chart that shows something like that. But anyway, it just seemed to sit here, and it's like, okay, this should go, and you got a hammer here and a hammer here, and then it takes out the low of those. And so the big bearish move of the day, there was this one, which was seemingly more of a kind of a flash bottoming, something like that, taking out the low of the day and then recovering. So we did technically make, this low, which made it look like the bearish candle we closed with. But then that one recovered, and it ended up being the one at the end of the day that did it. This was definitely clearing out any bulls that had stops right here. That's what this one did. And then I guess this breaking out, but it didn't even make a new high in the day. Maybe this breaking out cleared out bears that had stops here or something. I'm not sure. I guess, obviously whenever pricing was passed, this candle is doing more of that kind of stop hitting sort of candle before a hammer comes in and it does end up rallying. But the big sell-off was here. I was looking to go bullish in here, and it didn't work to go bullish. Nice high wave candle, looked like it was starting to break out. That kind of thing. Just consolidating here, get the squeeze forming. We got an increase in volume here, and it looks like okay, increase in volume here. It should go now, and instead it pulls back more, and like I said, goes bearish there. So the other tough thing about today is the options. So it's Friday expiration, the day of. Looking at the 1725, now we're very well in the money here, being in the 1740s. But you can see, the big change from yesterday. We had a couple places in here, scattered throughout the day where we had really lighter volume. And then in here today, there was, a much higher concentration of these, single line sort of candles. The 1725 was, much more expensive, harder option to be trading. So if we go a little further out, if we go to 1750, it just didn't do anything. Didn't do anything helpful. So that's too far out. That just made lower lows and lower highs all day. If we go somewhere in the middle, like not right in the middle, but maybe 1740, you can see what that did and kind of compare the volume. So yesterday's volume, Thursday's volume is pretty good. Friday's volume was pretty good. You can see some of the levels. It opened up and held this pretty well. It came right back down there at 6, but didn't. I guess you would have had been buying right at 6 to get out at 8. That pulled back, and you get the double bottom there. And then here's your S curve, and I'm sure some people are buying off this neckline, getting in like 5 by 4 or something like that, and then that just collapses and goes to 0. So it didn't really do the S curve. So looking at which option, it was just a little tougher today. A little bit closer. Let's look at the 1735. What did this one do? This has much lower volume. It didn't move as well. So putting this low, didn't come back to that price. This didn't even put in the low, or at least there weren't any orders filling down here. Interesting double bottom. This made a lower low than this candle. So somebody's buying down here or selling down here at 401. And then same thing. This was, much wider range on that S curve. It would have been really hard to do 9 by 8 there. So looks like that wouldn't have worked either. And then this one sold off also, and I think this one out of the money also. What was the closing price? Yeah, below 1735. So yeah, the options just didn't cooperate as well. If we go a little further, 1745. I guess buying at like a 150 low or 150 over here. We're buying at 2 by 150, 2 by 1. Looking for that to go bullish. Would have been stopped out or would have had time to get out before it came all the way down to 1. But it put a nice base here at 150. So that could have been a nice setup. It just didn't work. Didn't go bullish. For the bearish trade then, this is the 1725 put. And let's see here. Something doesn't seem right. Okay. Okay, so that put a low of $1. That spike went up to 3. No, that one didn't really work either. I mean, it worked a little bit. It worked earlier in the day, but you would have had been ready for orders to just be kind of filled out here. It didn't really trend in that direction. I mean, it was just so sideways in here. If you were trading bearish from up here, obviously it didn't get up to 1747, but what could you have done in this candle? 1045. 1045. That was this. So this was, getting in probably 150. Maybe scalping 150 up to 250, but that was really it. It just kind of flashed up there. It looked like it would have filled, but so let's go a little closer. So let's look at 1730 here and see. Okay, volume, a little better base. So yesterday, Thursday off. Let's see here. I like that close. That close was nice. Came all the way down to a penny. Probably could have easily gotten 5 cents, 10 cents, and then it went up to just about 2. So That would have been a nice way to trade that right at the close. Didn't do that. Let's look at 1735, see if we can get something that formed a better base here. So this is, let's see, 2, close to 2, 3. This candle, the low is 269. Why does it keep doing this? Oh, it keeps showing Thursday's price. There we go. So this one breaks out, pulls back almost to the low here. I like that. So you could have been doing 3 by 250 or 3 by 2, and then that runs up to 550. That should have worked even past 550. Puts kind of a higher base here, so people look like they were trying to get it into it again for it to roll over, and it didn't roll over a double bottom instead. And then it came down here. This would have been great, buying for $1 or buying 2 of them for 50, and then it just ran. That's nearly a 10x, not quite a 10x. Buy at 50 and flip out at 5. That's a 9x, obviously, but you make 9 times your money. But yeah, you would. It's hard to trade those because you got to hold on to it. You got to stay into it right into the close. And on a Friday expiration, that's something I'd be exiting at least a minute or two. Probably earlier than that. I don't have the plan in place and the confidence that I'm going to get the fill price that I need to get out up here without frantically trying to fix the order or change the order or anything like that. And you need more than a minute or two to do it usually, just for that comfort level. So I'm not there at doing this, but even just setting it up to get into 2 down here, 50, buying for 50 and flipping it out at 150. I mean, that's still 2R. If you put it a little higher, hey, maybe we'll take out this high at 250. Well, you're still holding into the last 5-minute candle where things can go a little crazy. I'd rather get out in the second to last 5-minute candle, 150. Even getting out this candle, if I'm in and out, I mean, I'll take an R on that right at the end of the day, and just be happy I didn't lose that R instead at the end of the day, and then wait a whole week to do it again like that on the next Friday. But that's what this did from up here. It just didn't go bullish. It was ready to just expand that built up compression here and just let go bearish. So really interesting final candle that looked like it went nearly $10 range. Yeah, $10 5-cent range. No, that's the one after. Sorry, that's after. The volume sitting in the gray of the highlight threw me off. I was looking down here at volume. Sorry, that is after. So this is the closing candle down here. And it closed 1729.98. So the 1730 put did actually get the money. No, the daily closed 1731.92. So I'm not sure where the 1730 put actually ended up. But we're looking at 1735. That's why you got such a nice move here. And all day long, I mean, once it did this, it was just making lower lows all day. Came right and just put in a new base down here. That's what is a nice thing to look for. You're $8 away, market makers, no one's thinking it's going to move that much, but well, someone thought so, and the option has to move in the money. I just thought it was going to go bullish here, not bearish, but bearish was the way to go. It was a bullish gap and go. It just faded, and I guess we'll kind of take a lesson from that you could really trade these both directions. I can't remember what it's called, if it's a straddle or strangle or something, but you can get into options in both directions. You can get in here for $1 and get in here for $1 and or do less. Get in here for 50, get in here for 50, and whichever one wins, it should cover the loss in either trade. Obviously, you're going to lose one or both, but if something does move significantly, you just have a small loss in the other one. You may even have time to get out sooner, but if you let it ride, I mean, you're going to lose that full amount on one, and if it does move nicely, you're going to make many times over that in that direction. So that's the other way to trade these. And with commissions going away, that might be a good way to do it. So as you've got a low enough risk, and doing it with $100, that's 50 in each direction. So that's something I'll think through some more for some more videos coming up on Fridays, because, or maybe planning for a Thursday and no Friday, just to talk about a little bit more, just because it's definitely a possible way to trade something that is moving on a Friday. And this looked like it was going to move, just this gap, bullish gap, and go in the opposite direction. My analysis thinking it was going to go bearish was trapped. So it was moving against what I thought. And so, looking for it to continue against what I thought was going to happen. It's like, okay, people are getting on bullish, but then for it to still go in the direction of bearish, it just got higher to do that from. So on that thought, we had the retest clearly into 1747. This is a secondary retest, like really a third one. This is a first retest. This is second retest. This is like a third retest. It can still go down from here. It could also do like a double bottom here, like I was saying before. It could form this consolidation and break out. But if you're not clear on the direction and it's been a choppy day, this is still it's still risking an R. But you're doing it in a way that you've built up that squeeze, showing that, hey, this should have a bigger move. And if it doesn't the same day, great. If it doesn't, or if it's on a Thursday doing something like this, you can still do the trade. You're just going to risk a higher amount for the options, and it may be harder to control the risk. So on a Friday, it actually becomes easier to control your $100 risk. I mean, really, you could have an order just sitting out here at 50, and you got to be good at picking the options. And so 1745 here, 1735 here on the put, and that's because you can get that price. You can get here, and you were already here on the day. You were here on the day, and you were here on the day. And that's one thing I've noticed is, if you're going to pick an option looking for it to hit that or pin there, or to really get through that price, more often and I don't have any sort of metric to explain what's mechanic, but more often, if it's been there already in the day, it's got possibility to get there. In this case, we moved another $5 past really the low that we put in at the open. From here to here was another $5 lower, but we really got down that far here. This is just kind of a second shot at it. So I'll have to put some more thought into what that looks like, getting into that on a Friday, going both directions, and just risking a full R total. You can obviously do it other ways and risk plenty more, but we don't want to just throw money away on a Friday, hunch that it's going to work that direction. But looking for these consolidations, looking for it to break in a certain direction, waiting for that breakout. This was a breakout retest, and it didn't continue. It didn't really show anything about going bearish here until it was probably throwing some of these lower wicks to trap, and then actually went. And people were looking bullish, and it reversed. So yeah, we'll see if we get some sort of gap up or do something down. We'll see how things look for a new week, and get into some analysis soon. Hope you enjoyed this video. This is Justin AMZN. Thanks.